Let's get perspective on the reforms that have been announced after the Sebi board meeting. Shriram Subramanium is founder and managing director at InGovern, and he's joining us on the phone line. Mr. Subramaniam, as far as the kind of reforms and regulatory changes that Sebi is bringing about in governing what we see and observe and experience in the markets, in the latest round, what do you make of the kind of reforms that have been brought in?
Good evening. These reforms were expected because Sebi had floated discussion papers, especially on the ASBA for the secondary markets and for the corporate governance norms, new corporate governance norms, wherein permanency of board members is not allowed now, and shareholders get an opportunity to elect or reject each and every director on the board. This becomes especially important given promoter-owned companies and these new age companies now, wherein there is a structures between arrangements between promoters and the private equity funds. This development that we just now talked about of the corporate bond market backstop fund also is a positive development, but I will also comment that it should not lead to mutual funds going slightly rogue or taking risks which are unwarranted, given that fact that this is almost 30,000 crores of backstop which is envisaged here. On the ASBA for the secondary market, obviously it's a positive where retail investors need not necessarily park funds with the broker, and only at the end of the day, when there is really a need for the funds to be swiped in, it can be debited from the bank account into the broker's account, rather than first fund the broker account, only then buy shares. So this is a positive development because the lock-in ensures that the funds are not utilized or do not go into the broker's account unnecessarily.
All right, Mr. Subramaniam, we are going to have a broader discussion as the evening wears on, but many thanks for joining us with your perspective on this. We'll take a quick